the clients I've had this week. So the first one was the person who's on 68k and is struggling to get a mortgage because of their credit report. Now, what a lot of people do not realise, they think if they earn a lot of money, it doesn't really matter about their credit report, about their credit score. But unfortunately, your credit score does not go up because your income does. Your credit score is based purely on your credit commitments and how you're managing your finance. The next thing I wanted to talk about, point 2, is checking your full credit report. Now, with your full credit report, the way it works is, I had a client earlier in the week and they said that they went direct. So a lot of people, when they're buying their first property, they think, okay, who am I banking with? I'm just going to go with them. So that's what they did. And then they got declined. Now, they had a copy of one of their credit reports, but they didn't have the credit report that I normally use, that's a multi-agency. So they weren't able to check it all. So there were discrepancies. And what they failed on was the fact that their information couldn't be verified, which in a nutshell means that there were discrepancies between the credit reports. So that is a reason why I use a multi-agency credit report. The next thing I wanted to talk about is understanding your debt. Now, a lot of people don't know the difference between arrangement to pay, debt management plans. In fact, I've been quite shocked at some of the lenders I've been ringing up and they've had to double check what the difference is. I mean, everybody knows about CCJs and defaults, but there's a bit of a grey area between arrangement to pays and actual debt collection when you sell the debt to someone else, and also debt management plans. The next thing is, everybody wants to know how they can improve their score, but it's not a case of getting a credit card that does the credit boosting score. That doesn't help when it comes to a mortgage. You really have to work on your credit report in order to improve it over the whole area of it. Just because you've got a score of in the 900s, if there's still work to be done on your credit report, you still may fail on credit score, because it's an internal lender's credit score. So when you apply for a mortgage, like directly, if you don't use a mortgage advisor, and it says failed on credit score, it doesn't mean Experian, Equifax or TransUnion. It means their internal credit score. The next thing is the guide that I am bringing out at the moment is just to help all of you clients, and the next area that it talks about is all the mistakes that need to be avoided, and there are quite a lot of them. And then